Yo, what's up all my trader homies? It's your boy Kevin from Touchdown Trades coming at you guys 30 floors below my kitchen from the Touchdown Trades trading bunker. Today we're going to be talking about what day trading indicators you should be using on your charts. I was talking with a trading buddy of mine who's a newer trader just getting involved in the stock market, and he was telling me, Kevin, I found this new magical indicator that works every time. It tells me when the stock's going up or when the stock's going down. And I told him, just straight, there's no such thing, okay? I'm going to show you guys the only indicators that you should be using in your day trading. There's only 2 or 3 indicators that you should implement into your day trading and have on your charts. Newer traders are looking for the next magical indicator, the best unicorn indicator. They talk about the triple squeeze indicator, the MSD, the RSI, the MACD, the triple C, the triple Q, the triple backflip McTwist indicator. The indicators are lagging. They're not going to be able to predict the future in an accurate way. So I'm going to show you how you can use a few indicators to your advantage and help you out in your day trading. So let's quit wasting time and let's jump into the charts. And remember, always trade like a boss. Like a boss. Alright guys, so let's talk about day trading indicators and what indicators you should be using. Okay, so there's only a few indicators that I use because as most traders were when I started out, I wanted to find the magical indicator. I looked everywhere, I tried a bunch of different indicators, and as most traders figure out as they become more experienced, is there's no indicator that really works. They're all lagging and they should only be used for relativity. And I'll show you what I mean by that. So here is the chart that I look at every day when I'm day trading, and it has 3 indicators on it. It has the VWAP, this purple line, which is the volume weighted average price. And what that is, so for example at 11 o'clock, the VWAP was at about $303 on the SPY. And what that means is, so at 11 o'clock, if the VWAP's at 303, that means that the most volume, the average volume, has been traded at the 303 level. And what that's going to help you do is the price is going to want to stay where the most volume has been traded. So if you're trading way below VWAP, it's going to tell you that there's probably extended to the downside, and there may be a bounce back up towards VWAP. But VWAP also is going to act like resistance, as you can see here in this SPY chart, because there's a ton of volume traded there, and you should think of volume as like quicksand, okay? So once you get in the quicksand, you get through it, it's really hard to get back up above it, because there's tons of volume traded there. It's just like a barrier that if you break through that volume, it's going to be hard to get back above. Okay, so that's the VWAP, the purple line right there. The other blue line I got here is the 9 EMA, or the 9 exponential moving average. And I kind of use that in this red line here, which is the 20 exponential moving average, as just for relativity. And what I mean by that is if we're trading way back here under this 9 EMA, that means we're really extended to the downside. And if you're short, you should probably be taking some off. If you're looking to buy a dip trade, down here way below this 9 EMA is probably a good place for a dip trade, because you're going to get a move back up. It's just inevitable. Okay, so another thing I like to use the 9 EMA for is the crossovers with the 20 EMA. And you can see when there's a crossover, you typically get a pretty substantial move, right? So we can see here, you got a crossover right here where you got the move up. You got a crossover right here, and then you get a nice little move down. And it's not foolproof, and I don't really trade moving average crossovers that much, but it does work, and it is a valid trade setup. So this is the chart I look at every single day. It's not complicated. You got 2 EMAs, 9 EMA and 20 EMA, and the VWAP. If your chart has a ton of indicators on it, like you got 10 moving averages, the RSI, the MACD, you're not going to be profitable because you're just going to have too much distracting you and you're not going to be watching the price action. In order to become a profitable trader, you need to be sitting in your chair like you're a fighter pilot in a cockpit and just watch the price action. And over time, you'll realize what price action really is and how to use it to your advantage. Indicators they're not going to be able to tell you the future. They're telling you what happened in the past. One of my favorite indicators, probably my favorite indicator, is not even really an indicator. It's this yellow line right here, which is the previous day close. And I can tell you, I've seen it 1,000 times where stock's gapping up and then it'll sell off in the morning into the previous day close and then rocket back off of it. Or you can see today the SPY, it kind of retested that previous day close and then just dropped like a rock. And I think that previous day close line, and I will leave the script. This is not an indicator that comes in Thinkorswim, but I have the script for it to where you can plug it in, and I'll show you how to build it real quick. So in order to get that previous day close line, you just go to Studies, and then you go to Edit Studies, and then Create, and then you put the study in, and you just copy paste, and I'll leave that in the description of the video. So it's easy to do, and that is an awesome thing to have on your chart, that previous day close line. I'm telling you, it's one of the best indicators you'll ever use. Okay, so that's the intraday chart that I just showed you. Let's jump into the daily chart and I'll show you what indicators I'm using there. Alright guys, so this is a daily chart. You might be saying, wait Kevin, why are we talking about daily charts if we're talking about day trading? Shouldn't we be looking at an intraday chart? But you should always look at a daily chart before you take a day trade and plot out your support and resistance lines. Always look left to the history of that chart, of the daily chart, before you take a day trade. That is the best tip I will ever give you. Don't just jump into a trade based on the intraday price action, because there could be an extremely valid support or resistance line right in front of the level that you're getting in at. And that's just not a smart move to get in a day trade without looking at the daily chart. So here is the only two indicators that I use on my daily chart. Actually three. Volume, which is the most important. This red line right here, which is the 20 EMA, and this tannish line, which is the 200 exponential moving average. I do not use simple moving average because I think the exponential is quicker and it's just more respected. It's more respected by the institutional traders, use it more, so it's going to be more of a valid indicator. The 200 EMA is the most important moving average that there is in trading, and that is on the weekly chart and the daily chart. So we can see the SPY is actually coming into an important level, this 295 pivot, and also the 200 EMA. So I'm going to be building a long position in the SPY next week. That's a swing trade, and that's for a different video. But I just want to talk about the daily chart because you should always be looking left on the daily chart before you take a day trade. So the 20 EMA, the 200 EMA, and volume. Alright guys, one last thing before we close this thing out here. I want to show you something about the VWAP study, the VWAP indicator on Thinkorswim. Okay, so these squiggly lines all over the place, that is what happens when it's just the basic VWAP indicator on Thinkorswim. It's what comes up when you first put it on there. I'll show you how to get rid of these lines. These are just pretty much Bollinger Bands, and they are predicting where the price is going to bottom at and top out at. So this bottom yellow line is just showing the predicted range of the stock that you're looking at. The middle VWAP, the top is the top Bollinger Band, the bottom is the bottom Bollinger Band, and it's just showing you the range that it predicts the stock to trade at. I like to get rid of these two lines, the top and the bottom. So what you can do is you can right click on it, edit study, and these numbers here, you can just click on them and make them both 0. Hit OK. And it should have disappeared. Let's do it again. Thinkorswim, you guys know. It can be glitchy. It's great, but it can be glitchy. There we go. So now we just got the middle line, which is the actual VWAP, the volume weighted average price. We got it on there, and it's just the best indicator. The best indicator is VWAP. You should be trading with it. If you're not trading with it, you're missing out and you're probably losing money. Alright guys, I hope you got something from this video. If you did, hit that like button for me. It just takes you 2 seconds. Just give the like button a little press. Just press it. Just give it a little tap. Just tap it. Tap that like button. Just give a little, and hit the subscribe button as well. I do appreciate the view. I really do. And I'll catch you in the next video. Peace.
Drop.